It was one commercial deal where I got to the table. We were signing. It was a $39,000 payday for me I think I was a 27-year-old, which was big money for me at that time.
Absolutely.
And the deal freaking fell apart right there.
Welcome to the Real Estate Marathon Podcast, your guide in the race to financial freedom through real estate investing and sound financial practices. This podcast is for anyone interested in learning more about real estate investing, personal finances, and a new take on traditional retirement. Now, here are your hosts, Larry Fierro and Mike Moe.
What's going on, everybody? Welcome to the Real Estate Marathon Podcast, your guide on the race to financial freedom through real estate investing and sound financial practices. Mr. Fierro, got Mr. Joe Bell on the show today, huh?
Mr. Joe Bell, man, coming to us straight from Alaska, man. I love technology now.
Yeah, he said that, and I'm like, oh yeah, those skis in the background make sense now. He coming to us from Alaska.
Yep, lives right in the shadow of a ski mountain.
Yeah, I can't remember what town it was, but yeah, he said it was pretty darn cool. So
yeah, absolutely. He's it was awesome. He jumped on the Zoom call and shared a lot of his knowledge about his investing in Alaska, and talked about pandemic investing. Just so much information. I'm very excited to bring this to the listeners.
Yeah, me too, man. I liked his take. He was, you started off as an agent and just saw people getting caught up in this transactional mindset of just kind of searching for the next paycheck, that next spike of adrenaline. But what he realized, the legacy wealth, or that long-term wealth, isn't in that transactional mindset. It's in that long-term play of more of that investment mentality. So he's dedicated to educating more realtors and more people around that mentality, and super excited to hear what he's got to say.
So are you saying that he came onto our podcast and told everybody on the podcast that real estate investing is a marathon and not a sprint?
Yeah, exactly, man. He pretty much said that. Dropped the mic and then left.
That was awesome. Yep. Anybody that's going to prove us right, we can have on the podcast multiple episodes.
Hey man, we're not censoring anybody who's got opposing opinions either. We're happy to chat with you as well. Come
Absolutely.
On, bring it on. We'll chat with you. So.
I guess that's my ego getting a little out of control. So I'll rein that back.
Calm it down, Larry.
I'll rein it in.
Your head can't fit in the Zoom camera anymore.
I know, but that's all right. That's what we do. You want me to jump in here on the warm up, man? I'm a little excited about this warm up. Something that Joe talked about fondly.
Yeah, let's do it. I'm excited about this one too.
Yeah, for the warm up, we're doing asset. Okay, and an asset is a resource with economic value that an individual, corporation, or country owns or controls with the expectations that it will provide a future benefit.
Yeah, and that's kind of generic, right? We're talking about something with an economic value, right? But you can place, like Joe said, you can place economic value. An asset is anything that you have that can produce future economic value, right? So like your knowledge is an asset, your brand is an asset. There's more things that are just an asset. And you know what? While we're on the topic of assets, man, we're going to talk about like Rich Dad, Poor Dad, Robert Kiyosaki assets. Break it down real simple. An asset is something that puts money in your pocket. A liability is something that takes money away from you, right? So a lot of people thinking like they buy a fancy home and they live in their house, and that's one of their biggest assets on their balance sheet. Yeah, the bank might look at your balance sheet and say that's an asset, but that's taking money out of your pocket every day. And that's how people get poor. And that's how people get house poor, is they think these cars and their houses are their assets. It's not putting your money in your pocket every month. It's not an asset.
I read the Rich Dad, Poor Dad book the year it came out, and it just completely changed my entire way of thinking. I was already doing a lot of the stuff that he had said based on, the fact that I had bought my first rental property out of high school. It was one of those things where it just clicked. I bought every single book that the Rich Dad series put out and continue to read them today.
Yeah, man, that was one of the things that did it for me too. That was one of the things that stuck out from that first book, was that the definition of an asset and liability. Because a lot of people got that backwards. The bank will tell you, buy the bigger house, get the tax write-off, blah, 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 blah. It'll appreciate. But I mean, come on, really, like, it's taking money out of your pocket every month. If you invest your money into cash flowing assets that pay you every month, you're going to be way better off. That book came out in 97. I was 10 years old, so I couldn't read. I didn't read it quite yet, but I'm sure I was close.
All right, this conversation's over. I'm
You know what?
feeling really
You know
old
what?
now.
Dang it, Larry. If I had read that book at 10 years old, I would be in such a better spot than I was now. That's why we're doing this dang show. Because, if we would have found this stuff and, at 21 instead of 31, good God, man, would I be in a different spot than I am now. But
So
you know
were
what?
born in 87?
87, my man. Yep.
I had my driver's license in 87, my man. So
Dude, you are old.
I am, but that's all right. I got you here for the technical aspects of computers. So
That's right. We got both ends of the spectrum here today. We got, I'm covering, the younger generation, and you got our old folks,
that's right.
Got them all covered.
That's right. The power duo right here.
There you go. There you go.
All right, man. You want to jump into this interview?
Let's do it, Mr. Joe Bell. All right, Joe Bell, welcome to the Real Estate Marathon Podcast, man. How you doing?
Hey, I'm doing pretty solid. I appreciate you guys having me on today.
Joe, we appreciate you coming down and sharing your knowledge with our listeners. I know they're all excited. I've had some emails looking forward to it. So
Cool. Yeah, we'll see at the end of this if it turns out to be the knowledge you're looking for.
yeah, no pressure or anything, but if you get the sign in
Right.
5 minutes, then the interview's over.
Yeah, Larry did say something about a knowledge smackdown before we started. So the bar is set at knowledge smackdown, and let's see if we can raise that bar.
That is correct.
Joe, we're excited to talk to you. And what we're starting to dive into is we've got a lot of newish real estate investors who are looking to, dive into real estate and are looking to get their feet wet with maybe their first, second, or third deal, or maybe they bought a duplex or single family and they're looking to go a little bit bigger with commercial. But these are crazy times, right? The last 10 months with COVID have changed the game quite a bit. And maybe some of those nuances that they need to be worrying about haven't made it to the forums, haven't made it to the books or the podcasts yet. So we want to talk about that. But before we do, can we give a background on kind of what you are, who you are, and what you're doing?
Yeah, man. So I'm up in a little ski resort town in Alaska called Girdwood. We sit at the base of a mountain. And all that was made possible by investing in real estate, like legitimately playing the game of Monopoly, which was one of my favorites growing up. It was like you start on Baltic, you upgrade to Oriental, and then you sit on, St. James until, you start raking in money. So we've been playing that game for quite a while now. We started with our first investment in 2009, but my real background is in real estate sales. So I have my license. I started in 2006. I was a commercial broker at that time. Realized the deals were few and far between, even though they paid way better, supposedly, right? It was pretty hard to come by. 07, 08, 09, So I quickly found that real estate was more of a churn and burn in regards to paychecks. And so I jumped over into the residential side of things, and things just kind of hit for me. It was one commercial deal where I got to the table. We were signing. It was a $39,000 payday for me I think I was a 27-year-old, which was big money for me at that time.
Absolutely.
And the deal freaking fell apart right there. Like
at the closing table.
Gone. Right. And so I was like, well, shit, I better figure out something else here. So that's when I jumped over into residential. And let's see, a couple of highlights, if I can approach the brag table for a second.
Absolutely.
Let's see, 09, we started investing and made a couple of turns on our personal homes, the 2-year tax arbitrage approach in that regard. And then in 2014, I became the CEO of the largest real estate brokerage here in Alaska, which at that time was about 400 agents, if I remember correctly. And they were doing roughly about $1 billion in production, which sounds cool, right? It's very Austin Powers-ish.
Yeah.
But my part in that wasn't as sexy. I got to hang out with a bunch of people that were big time producers. They were crushing it. And it was a really cool experience. And it helped me just kind of see things from more of a macro level versus being so tightly wound in the micro of day to day. Yeah. And it was a great experience. And now we're pretty heavy into the investing side and building an income off of our investments as opposed to relying on day-to-day transactions.
Wow.
Very cool.
Now, I have a question for you. You said you're in Alaska. Do you invest in Alaska or do you invest long distance? I'm just kind of curious about that.
Yeah, everything I do is what I know. I know this market so well inside and out, have a pretty good finger on the pulse. And we've definitely had conversations about going outside of Alaska. I haven't found the right opportunity. Like I got a text the other day from a buddy of mine down in California, and they're doing a 155 unit complex down in Houston, and he was looking for 1 to 200,000. And those are opportunities that start to show up after being in it for a while, right? Understand that piece of it. Right now, it's hard for me to open my brain up to some of those areas that I'm just not familiar with, given the state of everything.
Yeah.
We've got, the elections next week. We've got pandemic, second closures, not closing, who knows, right? So we're just kind of cruising right in our groove, and we'll hang out there for a little while.
Yeah, and this is releasing at the beginning of December, so the election was last month, and we're optimistic for the future with the candidates.
Right,
so.
exactly.
Well, that's kind of a great segue into what we wanted to talk a little bit about. Is we wanted to hear a little bit about your take on how the new environment in new society, the pandemic, and everything, like you said, that's going on, has been affecting the way people should be investing in real estate and the way you invest in real estate.
Yeah, for sure. There's a lot to unpack there, right? Because the market over the last 6 months did not do what I wanted or what I expected it to do, right? That's a Freudian slip there. But it went the complete opposite direction. I mean, right now we're experiencing lower inventory by 20% in our market in Anchorage, which is about 300,000 people. And it's creating this appreciation in homes. And I think it's to the tune of like 5.9% or something along those lines, which is just drastically different than what I expected. I think maybe everybody got bored and they decided to go and buy real estate. There were really great interest rates, and they're going, well, shoot, I'm normally a $200,000 buyer, but now I'm a 450 buyer. And the 450 buyers are like, I might be able to tap out at $1 million. Why not? It's been very, very interesting in that regard. A typical market here in October, I think we sit right around like 500 listings on the market around this time before we go into our slumber, right, in deep winter. And yeah, we're right around like 286, if I remember correctly, off of the stats I was just looking at. So I don't have a crystal ball, right? Mm-hmm. I feel like, the election's going to have a little bit of impact. The increase in lumber costs is going to have an impact. And so for me, looking at existing real estate and the opportunity that's there, I'm pretty excited about it, which for a lot of folks I talk to in different markets is the complete opposite. So I might not have the right gauge in comparison to where you're at, and you can fill me in on that. But I'm looking at it going, well, now's the time to go mop up more inventory.
Yeah. Yeah. And a lot of like the economy, when the economy is in turmoil a little bit, there's a lot more opportunities for making money. So, the people
Great.
that there are a lot of people out there that are very excited about what's coming up.
Right. Yeah.
And joking, what are you guys mostly focusing on from an investment standpoint now? Is it, smaller properties, or what type of assets are you guys looking at?
Yeah. So I'm more focused on the opportunity in front of my face. Legitimately, why I was running a couple of minutes late is I was negotiating on a commercial deal, like going back and forth with numbers, right, for our personal portfolio, because it makes sense for the market and what it is and, future play on it. So it's more about the deal. It's more about the opportunity for us. Conventionally, we have been flip properties. We've utilized our own personal properties for a tax shelter, exchanging it every 2 years. And that's been really good. It was really good for us out of the gate. And really starting to understand what a property is, how to fix a property up, how to forecast future projections. So we've now done, I want to say it's over 23, 25 or something like that. But we've also gotten into development. So we have a piece of raw land that we're looking to put 4 units on come the spring. We're looking at commercial properties. We've been in contract on a boutique hotel, so it kind of depends on what enters into my ethos and whether it looks like it makes sense or not. Yeah. And just FYI, I'm not that cool. I don't have that big surplus of money, right? And this is a good thing to chat about potentially, but we've built up a network that we can go and pitch different deals to. And as a result of being a licensee, I typically can carve out a piece of the pie in that equation. And that's been my personal approach and strategy when there were scenarios where our funds are tied up in something else. I'm just looking, to play a part in it. And if I can ride some coattails on a great opportunity, that's more my game versus trying to be every property that I can, keep it all to myself.
Yeah. So to say that differently, are you connecting, the money with the deals, and obviously for that connection, staying involved with that deal at a percentage equity?
Yeah. So traditionally that was my job, right? I would put these two things together, and then I'd sit back and I'd watch millions of dollars pass in front of my face. And finally I was like, hold on here. Like, why am I not participating in this? And so we started out with an investor who gave us an opportunity to participate at about 25% in a deal. And that deal turned out to be really, really lucrative. And as a result, we parlayed and we ended up creating a business with this investor. And all of a sudden we're now running an investment business, right? So yeah, we're just looking for the deals. We're looking for the network of resources. We're combining them. And if we can play a part, great. If we can't, great, right? We just kind of keep churning through what is presented to us.
Yeah.
Very cool.
And well, I always say the difference between a hobby and a business is a $10 million bank account. So, so that's always good to get in on that. Now you had, before we hit record, you had gone and gotten a book that you had written. And does your book detail kind of your business model, the way that you got to this point? And what is the name of your book?
Yeah. So the book is called Assets, Acquisitions, and Abundance. This thing started out as a 8 bullet point summation, right? And somebody's like, all right, well, let's add a little bit of depth to it and let's do a webinar. Okay, cool. Whatever. I did the webinar and it was extremely lackluster, evidently, because they're like, you're not really a hard sell guy. We need you to be hard sell in something like a webinar. And I'm like, it's just not my shtick, right? So they're like, all right, add a little bit more. Let's build a book. Right? It was nowhere in my brain. So yeah, I've added some stories in there and our specific approach with different strategies. I mean, I get into the point where I'm talking about what a quit claim deed is and what this is and what that is, to a very minor degree because there's so much information on the web anymore. But really it's about mindset for me in everything that we do. And when I say assets, right, I'm not just talking about real estate assets, business assets. I'm talking about the assets that you possess, that all of us possess, and how to apply those assets into real estate investing or into the industry, and really where you're able to thrive, because it takes all types and no one succeeds alone. So you have to find the right people on the bus. But first of all, you have to figure out your seat on the bus and where you can really thrive. So that's a lot of what we run through. And then we just, to summarize the abundance portion, right? It's really diving into mindset. It's really diving into how to help other people. So I'm doing these podcasts, and it's just about having the conversation, seeing if there's something that I say that hits with somebody that I can provide some benefit to. This thing's 99 cents Kindle version on Amazon. This is not my moneymaker. But I had to get it out, right? Because at one point or another, you get to a point where you go, there's obvious benefit, there's obvious value in what we have. So it's better to share that versus trying, again, it's just not of me to keep everything right here and secretive. And it's like, I'll put it out there and hopefully it hits with somebody.
Yeah. Well, and that's why I love the real estate field, because pretty much every real estate investor that has had success has been able to turn around and pay it back. That's what they want. They're passionate about real estate. They care about paying it forward, and they care about bringing other people along with them, because a rising tide lifts all ships. And, we appreciate you coming down. That's why we started our podcast.
Yeah, that's cool. I love it.
Yeah.
Awesome, man. What can you kind of maybe dive a little bit deeper into the asset side of things? Like, what are the key points out of that section that people can really take out of that book, and how to leverage, what's in between their ears and some of the assets that they have today?
Yeah. So I'll give you an example. One of the brand new agents I was working with when I was the assistant CEO for this big company, he was a former pilot, and he was struggling making the connection between being a former pilot and selling real estate, right? And so we went through the UVP process, unique value proposition. I'm sure it's called something else somewhere else. And we highlighted some specifics around his background in being a pilot, like what's so important in being a pilot and thriving in that role, and how can we apply it over to real estate? And at this point, it was real estate sales. Well, there's a high level of organization and specifics in flying a plane, right? And so if we transfer that high degree of difficulty and we put it into an organized manner, then we can attract like people over on the real estate side of things. And it was just a matter of piecing those two components together to make him go, oh, okay, because I'm good at this, I can focus here on doing the same types of things and have success, right? It doesn't matter what industry, it doesn't matter what you do. It's just a matter of understanding yourself. So really taking a step back and going, all right, what do I love to do? What am I good at? And how can I apply those to wherever I'm at in life, right? For me, I can talk, right? Me sitting down, trying to go detail by detail and technical jargon, I trip over myself, right? So it's just getting a better understanding of what your assets are and where you can apply them to acquire more assets.
Nice. Yeah, it's awesome. Yeah, we've talked a lot about kind of that intersection of what you like to do, what you're good at, and what you make money in, and finding something that kind of aligns with that. But to your point, sometimes it does take an outside, perspective, or something like a different viewpoint that you can get from something like your book that says what I do have, the skills that I do have, they're transferable in these ways. So it's great to hear that example.
Yeah, for sure. And, there's a lot of newbies, and you spoke to this out of the gate. There's a lot of newbies out there that are trying to figure this all out on their own. And it's like, man, that's a long, hard road, and more power to you if you want to take it. But, if you could be just a little bit vulnerable and just expose the fact that you're new, expose the fact that you don't know all of it, and ask for help, that will go a really long ways, right? I mean, us getting involved with that initial investor, I was just looking to do a deal with him because I knew he did a lot of deals. And then it was like, holy crap, this guy knows a ton. Can I participate? Will you help me? Will you take me along with you? And luckily, that question just happened to hit at the right time, and, it worked out. So for newbies out there, find somebody that's doing it, find a podcast, find some sort of resource that is going to deliver what you're looking for, and don't be afraid to ask for help.
Yeah, mentors will give you the answer key to the test of life, and that's it's huge. And like you said, you don't really want to go down that road by yourself, because you want to follow the trail that somebody else has already blazed. Yeah, so I love that. Now, the abundance part of it, that's when you said the last A in your book title was abundance, I just love that, because the mindset is important, and we've had a couple of different guests talking about mindset. Can you talk a little bit about the abundance mindset and how a lot of people kind of hurt themselves, I think, by not having an abundance mindset and thinking that investing in money is a scarce commodity?
Yeah, for sure. The best example that hits home for me between an open mindset and a closed mindset is close your fist and drop some dollar bills over it. How many will you catch? No, right? You might get lucky if one somehow happens to land and crest over the top. Yeah. But you ain't catching shit otherwise.
No.
So you might as well be here, right? And also deliver that mindset to as many other folks as you can. Now, you have to be careful in that, right? Because when you do so, you're exposing yourself. So one thing that I like to follow up with that statement is, whatever happens for you or to you ultimately is your responsibility. If somebody steals $100,000 from you, that's your fault. if somebody, cuts in line, that's your fault, right? I mean, it doesn't matter what happens. You just have to take full responsibility. And when you do that, there's this kind of freeing, feeling that you get by going, you know what? I am where I am because of me. I can't continue attaching my position in life, whatever it may be, good, bad, indifferent, with somebody else's actions. Right. And that's just the way that I approach. And it's worked out pretty well. And, it might not be the right approach, but it's an approach that works. And when I have this conversation with others and you start to kind of see them free up a little bit, it tends to travel. So when we start talking about abundance, it's rather than trying to keep everything in, might as well just throw it out there and share it and see where it hits. You're almost sowing seeds, right? With every conversation, you never know where a conversation can go, right? This conversation here today, you might run into somebody that says, yep, I'm moving to Alaska, right? And you go, boom, I know who to talk to, right? We never know. So there's no reason to set expectations and scarcity in our day-to-day world. If we can approach it from abundance, it's a much better scenario, in my opinion.
Yeah, it's awesome. Kind of that extreme ownership concept where once you do take ownership over it, you're in the driver's seat, right? There's no more putting it on anybody else. So nice. That's awesome, man. I want to shift gears just a slight bit here, and talk a little bit about kind of like the pre-COVID and the post-COVID changes that you've had to do in your business. Now you're looking at these deals. You talked about, negotiating the deal, minutes before we got on this call. How are you changing up your business? How are you changing up your forecast and how these properties and these opportunities are going to do? And how is it showing up for you?
Yeah. So I got caught with my pants down when COVID hit. I lost about $900,000 in investment as a result of COVID, and it put me in a really bad position. I went a little bit dark for a minute. This was a result of COVID, right? Mm-hmm. I had 2 notes due right as COVID was hitting. And so when I lost the investment, I lost the ability to pay those off. I've never been in a position like that. I mean, I've been poor. I've been without money, but I was never poor to the sense that I wasn't able to do something, right? And COVID hit me in a way that I didn't see coming. So moving forward, it is forcing me to secure my positions in a much different way. And when I say that, it's affirming different terms and conditions that play to my favor. There's a couple of owner finance scenarios that have come up, which for me, it's a much more manageable scenario in that case, because a lot of those situations are relationship based. And if you can have communication, and that's what we had with the note holders that we were due on, it was, hey, this hit me. I wasn't prepared. I will make sure you're whole. I just need some time, right? And what was cool is when you go about it in that manner, like they were open to work with us. So, pre-COVID, we were just turning and burning. I wasn't thinking twice about a pandemic, right? Like nobody really was, but it has fortified my brain to think in a different manner and how to help bring in security as we're moving forward with these deals. And then also to understand, where there's insulation within a market and where there's not. Again, I can only speak to my market. That's what I know the best, but I've definitely slowed down and I've allowed the market to come to me versus pushing super hard on trying to make these deals happen.
Nice. Awesome. And to expand on that a little bit, given what given the situations that you've been through, both pre, during, and now kind of on the not the tail end, but where we are in the pandemic, is this a good time for newbies to get started? And if yes, how do they protect themselves to kind of learn from some of the mistakes that you and others have made so that they can kind of avoid those themselves?
I think any time is a good time to start investing. There are opportunities that are going to present themselves as Larry mentioned early on, right? A down market doesn't mean doom and gloom for everyone. There's money to be made on both ends of the market. And so I think when you're looking at, how best to protect yourself, I go back to the old adage of you make money when you buy, and not again to force some of those deals I mean, unless you know in your heart of hearts, like this is a good deal and you have to capitalize on it. But if you're just looking for deals and there's stuff that's passing by your desk that isn't a absolute F yeah, then pass, right? Like there's no emotions. There can't be. Another good deal will come down the pipe. I promise. It might not be next week. It might not be next month, but preparing yourself for when it does is the absolute best thing that you can do. And, passing up on more deals than you accept is not a bad thing.
Yeah, that's awesome. I think a lot of people, you hear people say like, I'm just going to wait for it to, the market to drop and then I'll jump in. But at that point in time, like if you're not in there and you're not building those relationships and you're not like getting those at bats in for underwriting those deals, by the time like you're not going to know the market is at the bottom for one, because you're not in it. And then two, you're going to take so long getting caught up that you're going to be behind the eight ball already. So,
well, and hear me out correctly, right? That doesn't mean you stop activities. It doesn't mean you sit back and you just go, okay, well, Joe said something's going to come along, so I'm going to, right? I mean, you're still grinding. You're still looking for stuff there. It's the best thing that I've experienced is that moment when it fully shows up, right? That deal, that situation, that conversation, whatever it is, where all of a sudden you go, holy crap. Like that universe just aligned for me because I believed it could. And I put a lot of effort and energy into the activities that brought it to me. Right. And that's more the statement that I'm making here. You stay on your activities. And like you said, the more that you're doing them, the more you know and you understand when something good does come into your realm.
Yeah, for
and
sure.
You said it best. A good deal is going to come down the pipeline, but you're still responsible for filling that pipeline.
Right. Yeah, so, absolutely.
Yeah.
Yeah. The effort and the energy that you talk about, matched up with the persistence in this market, I think is so much more important than it ever was before. Cause like, you're going to have to underwrite, I don't know, 100, 400, 500, 600 deals until you find one that actually makes sense. And if you don't actually have the persistence to get to the end of that, you're never going to find that deal. But
yeah, my own personal quote is, what I lack in talent, I make up for with persistence.
Nice.
So it plays.
So now, Joe, we appreciate you coming down and sharing everything. And I'm kind of curious if you would share where some of the listeners can go and find out a little bit more about you, how they connect and contact you and get your book.
Yeah, for sure. So in following the trends, I set up this funnel. Right?
Nice.
LegacyBeyondListings.com. It was initially created for real estate professionals because I was tired of, when I was playing CEO of this company, I was tired of sitting down across from other real estate professionals that had been in the game for like 15 and 20 years. And they had nothing. They had nothing set up. They had no retirement, right? It was just the next transaction. Oh, the next transaction, I'll save money. Oh, right. And then I took a step back and I was like, oh, wow, this can totally apply across the spectrum, right? This isn't just real estate professionals. This is a lot of people out there. So LegacyBeyondListings.com was born. We've got a case study out there that people can download and get more information. They can schedule time with me. I was heavy on doing this mentorship coaching thing for a little bit. I've kind of pulled that back because it's a lot of time and energy, and I like chasing the deal sometimes more so. But I do want to help people. I do want to invite folks. If they want to have a conversation with me, I'm super open and I'm willing to do so. So you can go and get more information there. You can get in contact with me. And then again, you can find the book on Amazon for Kindle readers. It's less than $1. So, those are the two areas where you can go and just start diving into what my world looks like a little bit.
That's awesome. We'll throw some of those links in the show notes for the folks to get at easily. I got one more question for you, man. What, people who are looking at getting into real estate, or maybe they got one or two deals, but they're looking to make this more of a part of their passive income or their portfolio. What's the number one thing and the most critical next step that they can do just to make sure they're not going to get burned in this market, or to protect their investments that they have currently?
Yeah, I don't know how they can't get burned in the market. I don't know how to speak to that because I'm not there with them, right? What I can, the sentiment is the more resources, the more education, the more knowledge, the more experience, right? It all kind of works with each other. So what I've been telling newbies is right now is a great time to go and find the resources, find these podcasts, find websites, find stuff to basically direct out to the masses, to their network. And in doing so, they're doing two things. One, they're becoming a resource, and two, they're promoting somebody else's content. By doing so, you start to position yourself in minds within your network as the go-to for the real estate source, right? Then the question of, hey, I've got a property that I think is a good investment. Are you interested in taking a look at some of the numbers and potentially investing? That question then hits in a different manner once they're doing some of the background end of it and positioning themselves. So that then leads to having a bigger network and more opportunity. In doing so, they won't have to feel the pressure of doing a deal completely on their own. Right. That's probably the scariest thing for a majority of folks out of the gate, is having to do this stuff on their own. Even if they're, puppeteering the project and the money and everything along those lines, it's always easier with others. And so for those that are new, they might not have the money, they might not have resources, they might not have connections. The best thing that I can say is get into your network, have conversations. You're only one conversation away from the next level. You just got to go find that conversation. And through doing so, you'll probably get a lot more education, a lot more knowledge, a lot more input, and better protect yourself as you move forward in this game.
Awesome. Very cool, man. Appreciate that one. And like Larry said, we appreciate you coming down and letting, giving the listeners a little bit of insight on what contributed to your success and how they can use that in their own journey. So really appreciate it, man.
Yeah, cool. No, I absolutely appreciate the opportunity, guys. Thank you so much. And if I can be of support or help out in any way, don't hesitate to reach out.
Excellent.
Awesome.
Thank you, sir.
Cool. Thanks, Joe.
So, all right, y'all take care of yourselves.
Take care.
See you. All right, everybody. That was Mr. Joe Bell and Mr. Fierro. Not too shabby, huh? That was a good one straight out of Alaska.
It was, and he said, you never know what conversation is going to put you in the right circle. And, if I ever get to Alaska, Mr. Joe Bell is going to be the first phone call I make. Be like,
there you go,
show
man.
me around, man.
Yeah, exactly. Yeah. So no, that was fantastic, man. I love what he had to say. I love what he had to talk about. It's transferring from that transactional mindset to that legacy wealth mindset, and his books, Asset Acquisitions in Abundance, helping everybody do that. So fantastic interview.
Yep. And he's got his website there, the legacybeyondlistings.com. And you can go check out all about him and see what he's got going on over there.
Yeah, for sure, man. I might have to check out that book too, for sure. That seems like a very very good read.
Yeah, and it's all about the mindset. His book, he was talking about it being mindset.
That's my thing, man.
It is. Yep. It is, man. I'm nuts and bolts, and your mindset. It's perfect combination. We covered this spectrum like we talked about in the intro.
Yeah, we got the age spectrum and the whatever spectrum we'll call that.
And that's what you're supposed to do, man. We've been telling everybody here on the Real Estate Marathon podcast, what you're supposed to do is you're supposed to find out what you're good at, find out what you're not good at, and then go find somebody who's good at what you're not good at. And that's exactly what you and I did.
Yep. You're the yin to my yang, man. I love it.
That's it, man. That's it, man. I appreciate that. So, dude, you're making me tear up a little bit. So we're going to have to move on to the call to action.
Get it together, man. Yeah. Call to action. Mr. Joe Bell. Let me see if I remember this. Educate yourself and become an authority, right? We're talking about those assets that we talked about in the beginning, becoming an authority figure in your area and educating yourself. That's an asset that you can obviously leverage for future gains in whatever industry you're in, especially real estate. Education is the key and more important now than ever. Like if you are somebody who's, bought a couple properties or has gotten into the game over the last handful of years, but you haven't educated yourself recently, times are changing, man. With what we got going on now with everything like we discussed with Joe around COVID, like there's new regulations and there's new ways of working and there's new opportunities, but there's also new ways that you can get your caught in a bad situation. So you always got to be educating yourself. So educate yourself and become an authority figure.
And he also talked about once you establish yourself as an authority by helping people, by, learning as much as you can, that's when the deal flow is easier to achieve. He said that the deal structures come at you differently. And it was just, it's something you don't really think of, but he's correct. Once you're an authority, people start bringing the stuff to you, and you're only that one phone call away from changing your life.
Yeah. Yep. Absolutely, man. You got to put yourself in good conversations with good people. And that's when things start to change, man. And I'm not saying it's the podcast that did it. I would, it's definitely a little bit along the lines of your networking and, the people you connect with from the Wheelbarrow Profit standpoint. But how many in the last 18 months, how many more deals have come across your plate from an apartment standpoint down in the Tampa market that you're looking at? A lot more than you ever had before, right?
Oh, yeah. Yeah. And, just coming from the experts that we've gotten to interview and talk to, pick their brains. It's been a phenomenal experience, man. And looking forward to many more years of it.
Yeah, absolutely. So, all right. Anything else, man?
No, that's everything I've got for them. You guys have a great week, and learn as much as you can possibly learn and establish that authority.
Heck yeah, man. We got 4 weeks left of December.
Yep.
4 weeks to take 2020 out with a good note, on a strong note, and carry that momentum right into 2021. So
that's it.
All right. Thank you guys for tuning in to another episode of the Real Estate Marathon Podcast. We'll see you next time.
Take care.
Thanks for listening to the Real Estate Marathon Podcast. If you found value in any of the content from this show, consider supporting us in the following ways. Subscribe to the Real Estate Marathon Podcast. Leave a rating and review. Continue the conversation with like-minded individuals on social media by heading over to the Real Estate Marathon Podcast Facebook group, or follow us on Instagram and Twitter at Real Estate Marathon Podcast.